If you've been trying to trade ICT for some time, you've definitely realized that the fair value gap or the inverted fair value gap, it really doesn't hold. So this video is going to teach you everything there is to do with understanding how to actually read price. No fair value gap. Before we start, I want us to understand a concept of edges. And an edge is not necessarily like a strategy or a model. What I mean by an edge is specifically the edge of a candle. So the edge of a candle is going to be your wicks, right? Now what we're looking for is wicks that are roughly around 20% the size of the body, if not larger. Anything larger is better, but 20% is a really good healthy size for the wicks compared to the body. And then if you don't, then we're pretty much going to use a candle from the past with a larger wick and then just use that wick as an area for retest. Okay, simple. Let's get in this video. If we were looking at these 6 profiles in the day and we had to get a high and a low of every single one of them, we would have our edges, right? So these are going to be the edges, just these wicks at the top and the bottom of our range. And then we have this next one. That's the next edge. That's an edge. This is an edge. We are not going to be trading inside of this range. But now you're telling me, but dude, like, that is the range. Why do we not trade it? Like, why are we not trading inside of this? Because this is not the extreme. If we were opening up in the middle of this range and we had to trade, we are not going to be trading until we get to this point or this point at the top. Everything in the middle is just going to be liquidity. Let's try and understand how we would have read this market out. So the first profile gets created, and this is 1800 profile. And we can see price closed above 1800. So that initial intention is going to be bullish for price. So right now we're pretty much only looking for buys. If we had to look for buys, what is the next edge for price to react off of? If we only have 2 edges and we already failed at this top edge. If you guess that, you're a G, like you're a solid G. So we have this bottom wick of this previous profile. Price reacted and then we had a close to go higher. So the initial reaction was bullish once we closed on this previous profile. That already told us what price is doing in the next. Very simple. So how are we going to react to this later on? Price to that previous profile, what did we do? We only wicked it. We never closed above it, guys. And if that was our edge and we're failing to close above that edge, what is that insinuating? If this previous profile had a close and this one doesn't, same over here, we never had a close below the previous profile, but we reacted from it. This is insinuating that we are going bearish. We close below this previous profile. That is insinuating that we're still continuing bearish. So no closing out on that trade until we close back above that. So it's no stops or it's TP. We close above that previous profile. So we're still going bearish. Price is still going down. This is still giving us intention to continue selling. And then we create a new edge, but we still never on that next profile touch either side of this edge. So right now, this you would not have traded anyways, because you're only trading once price gets to your edge or reacts from your edge. So this is consolidation. Let's see how we could have traded this on the 1 minute time frame to get in for the sell. Before we start looking for a entry criteria once we touch this top edge, I want us to look right here that says last 10 to 7 minutes of the 15-minute candle. This is what we're going to be using for our trades. This is going to be the entry for our trades. We can see that from 3:15 till 3:30, if we marked out the first 5 minutes as a candle itself, what do we see? We see price having a breakout from the start of that 15-minute consolidation, and then a retest and continuation to give us the entire 15-minute candle, which would be like that. So we can divide that 15 minutes throughout time on the 1 minute to get a better entry. So we can understand where that 15-minute candle wants to distribute to. So let's look at this example right now. So we can see that it's opening at 4 o'clock. So if we were just looking at this previous example, when are we going to trade? After 5 to 6 minutes. Like, we're going to wait for this candle to play out. We're still on this profile edge. And if this 15-minute is going to create a wick at the top of this edge, how is that going to react later on in time if we're only trading wicks? So if we're creating a wick on the 15-minute, that could be used as a reaction later on. So let's give it time. Let's see how this 15-minute forms. Playing. Okay, so we can see at the start of this 15-minute, it's actually becoming very clear. We closed above that previous profile, so everyone's intention would be bullish right now. Yeah, okay. Caught out already. We created a candle count from the top, indicating that we want to go bearish. That doesn't mean that we sell at this point. This is just an early indication that price is already probably selling. So we came below this profile edge. We literally just closed below it. And we're reacting back into it. And we're coming into that last little bit of that 15-minute candle. Let's mark out this entire 15-minute. So if we had this as a body, we are now going to be looking for distribution away from this. Okay. The same way that we saw a sell right here, which was from a candle count, we're going to be looking for the same thing after this 5 minutes played out from this 15-minute candle. I'm going to wait for us to create a candle close below any of these candles for distribution to take place on that 15-minute. Here we can see price creating a candle count confirmation. So within 3 candles, we have a close below this 1 minute, insinuating that the trend is continuing bearish from that 15-minute profile edge. So let's get in for sells. Stops above that previous candle. And then we're going to target this bottom edge. We're reacting back from that profile edge. And we can see even by forming a brand new 15-minute candle, where did that first 5 minutes go? It only created some consolidation. And then once price closed below it, we reacted and had our distribution. If you guys found this video helpful, please subscribe. It really does help. Comment down below anything that you want me to make a video on next. And hopefully by the end of this video, you guys found out a reason why you should not be trading fair value gaps. This has been Zero. Thank you guys so much for watching this video, and I'll catch you guys very soon.